Let's do a small cap roundup today.
Yeah, let's do it. It's been a while since we've done a small cap roundup.
These three companies we have added to our portfolio within the last year or so. So let's talk about how they're doing so far after this most recent earnings report. This episode is sponsored by our friends at public.com. Are you dissatisfied with your savings account? Check out public.com.
Public.com has just launched its new high yield cash account, offering an industry leading 5.1% APY. There are no fees, no subscriptions, no minimums or maximums, just 5.1 interest on your cash. You can transfer or withdraw cash as often as you like, and you get up to $5 million in FDIC insurance. Grow your cash at an industry-leading 5.1% APY with a high-yield cash account at Public. Go to public.com to learn more.
You may be wondering why we have this slide as our first slide here regarding the Japanese yen versus the United States dollar. But analysts feel that this is one of the factors that caused the market sell off in recent weeks. It's not something that we're going to talk extensively about here. There's a ton of media coverage on this, and they seem to have it all figured out. So you can read all about it somewhere else.
Yeah, the ultimate takeaway is a lot of stocks got sold off pretty hard. One of them, including Axcelis Technologies, a small company that plays in the wafer fab and packaging equipment part of the semiconductor industry, that critical choke point. They're in the middle, and it's a specialist. It's a small specialist in what's called ion implantation machines. Check out the last video we did in July. We talk a bit more in depth on what ion implant machines actually are. It's a very small segment of the wafer fab equipment market. We have it pointed out there, that kind of small little sliver just to the left of KLA in orange. And the big blue bar there, it indicates who Axcelis's biggest competitor is. That's Applied Materials. That is the dominant player in ion implant machines. They got into this part of the market via acquisition over a decade ago. Again, check out our video from last month for more information on that. But Kasey, the yen carry trade aside, what happened in the Q2 2024 update that has investors concerned again, maybe, I guess, about Axcelis? Because the stock price did decline and then didn't really get a big rebound, at least not yet.
Yeah, Axcelis is pretty tightly correlated to power chips. And the reason we brought up Japan is that Japan's IDM manufacturer, like Renesas, is a top supplier to the auto and industrial equipment industries. And so any short term loss in demand from a company like Renesas would cause Axcelis to slow down in growth. You can see that broken down in this large blue bar. You can see silicon carbide as well as silicon IGBT. Those are all power chips. So over half of their revenue comes from those industrial chips.
Now, as for Q2 itself, this is one of the reasons that we started buying Axcelis during this downturn for automotive, power, and industrial chips writ large. Axcelis, yes, it's taken a hit. Revenue is down significantly at this point from the peak last year. However, it remains highly profitable. Q2 2024 revenue at 257 million, earnings per share at $1.55. But here's the likely reason for some of the comeback and pessimism around Axcelis. The outlook for Q3 implies flat quarter over quarter revenue, and then a slight decrease again in earnings per share, down to $1.43. Now, they are expecting more significant recovery in the fourth quarter of the year, but it's not as big a recovery as we had been hoping for.
Yes, we have been calling the auto and industrial market bottom here for a little while now, and it still is currently bottoming. We will not be able to expect a sharp rebound. In fact, it'll be more of an L shaped rebound, if we can use the term that CEO of On Semiconductor, El Corey, said about this recovery.
Yeah, it may be just another way of looking at what's happened so far this year. Again, as you mentioned earlier, some of those Japanese IDMs falling off of the ion implant bandwagon here in the last quarter. This is just going to be kind of lumpy from one quarter to the next. Maybe those come back in Q3 or Q4 of this year. But the point here is this is not going to be a nice, clean, quick recovery for Axcelis. It's going to be more of that gradual L shape. But again, just circling back to the strengths that have us feeling more than happy to be patient with Axcelis. Really strong balance sheet, highly profitable business.
Axcelis has 548 million in cash on the balance sheet, no debt. They have 38 million in free cash flow in this most recent quarter, and they're still repurchasing plenty of stock, 15 million repurchased in this most recent quarter. All these financial numbers are very positive for Axcelis, and looking at the valuation on a forward basis, price to earnings around 17 to 18x, and on a price free cash flow basis, 16 to 17x. The stock price is very cheap, isn't it?
Yeah, I mean, we think so. That's our opinion. It looks very cheap, assuming there is, of course, that more robust recovery at some point in the future. But we fully expect that to happen. And again, we're more than happy to continue being patient here. We still think this is a timely buy.
Let's move on to our second small cap stock, Silicon Motion. Silicon Motion fits into the fabless chip designer portion of the semiconductor industry. They focus on memory controllers.
Yeah, that's right. Again, you can check out a previous video that we did. This was actually one of our original top chip stock picks of 2024 at the beginning of the year. So we'll link up the last video that we did on Silicon Motion regarding this. This is what a memory controller looks like. They're actually a leader in these memory controllers for the smartphone market. There's a little flow diagram from EDA leader Synopsys on how these things actually function. The interface that goes and gets data out of memory and then sends it on for use to the device. And then I draw your attention here to the bottom left chart, the sales mix that Silicon Motion provided for its business in 2023. See SSD controllers, eMMC and UFS controllers for smartphones. And then they're at the top. They've been making a bigger push into automotive and data center memory controllers. They're the leader in memory controller performance and power consumptions, but they do have big competition because a lot of the memory chip makers themselves will design like a more budget type of memory controller that they can package up with their actual memory chips for customers. So Silicon Motion really competes on performance, on being that kind of leading edge, cutting edge designer. And because they're fabless, that gives them the ability to move fast and stay ahead of these bigger competitors.
Silicon Motion actually had a pretty decent quarter, nearly 211 million in revenue, up from 189 million last quarter and 140 million last year. And their margins are also increasing. You can see that the operating income margin 14.6% in this most recent quarter, and on a non-GAAP basis 16.5%.
And you can see in their guidance for the third quarter, this is what caused some volatility in the stock. Besides the yen carry trade thing, you actually see a sequential dip in operating profit margin is what's expected. Longer term, there is still a lot of room for improvement because the company's actual target business model is for over 25% operating margin. That is where they were in years past. But the memory chip industry has been hit very hard. And so Silicon Motion still has a lot of room to recover here as memory chip sales continue to ramp up.
Here's our forward valuation on SIMO. This chart you can see is from our friends at FinChat. Make sure you check out the link below to get 15% off your membership. You can make great visualizations like this one and all the other ones that we use in our videos. But you can see that SIMO on a price to earnings basis at 16x and the price to free cash flow at 23x. Not bad.
No, not bad. Not as cheap as it was on a forward basis. When we originally started nibbling on the stock last year, we talked a lot about this in light of the Scraps merger with Max Linear. That's still undergoing some sort of court action from Silicon Motion side. Different story entirely. But the reason why we liked this for our small cap basket that we called out this year was the beginning of those new growth cycles for consumer products. In this case, for Silicon Motion, especially smartphones and a bit in laptops as well. And then if they are able to make some headway in memory controllers for cloud and enterprise computing, that obviously could be a big growth vertical for them as well. We like that they're fabless and able to be nice and nimble and outdesign their competitors. It's still a small portion of our portfolio, but we still have high hopes for this one. So again, we're more than happy to keep holding this one.
Okay, that brings us to our final small cap stock, Skywater Technology. Skywater fits into this chip fab and contract manufacturer, as well as the patents section of the industry. They help companies design and eventually manufacture their own chips.
Yeah, this one, it's a very small business, but we've talked a lot in the past about the unique business model that Skywater has that attracted us to it. So it is that third party fab, but think of it as like a startup fab for other startups. And they talk a lot about this technology as a service platform that they use where they help those customers with the chip design and more specifically with the manufacturing process needed for those novel chip designs. So it's interesting. The biggest customer for Skywater that pays most of the bills at this point is a big Department of Defense contract. They do a lot of work for space technology. They have a radiation hardened silicon manufacturing process. So that's the big driver of this business at this point. But again, this is, I think, the best way to think of it as a startup third party foundry for other startups.
Yeah, exactly. We postulated last year about Quantum Psi being a customer of Skywater Technology. We'll make sure we link that right here in the video. This was confirmed by CEO Thomas Sonderman in the most recent earnings call. He said that Quantum Psi is transitioning from ATS to wafer services. So they're actually going to be processing, making some of those chips for Quantum Psi now.
Yeah, and if you check out that video last summer, we said that Quantum Psi was not the stock you wanted to own. You actually wanted to own Skywater. That series of videos here below. But this is actually what we want to see as shareholders of Skywater. The ATS development revenue is nice. That's where all the revenue growth is coming from this year. But it's actually the wafer services where Skywater is going to earn profitable revenue over the long term. They need those customers to come out of development and start actually producing, production level mass market chips for whatever application they're working on. But you can see wafer services still a very, very small part of the business, down significantly year over year because of the chip industry downturn. So this is a long play. Again, ATS development, that technology as a service platform growth, it's nice to see. It indicates that Skywater is kind of filling the top of its funnel of new potential customers down the road. But over time, to justify this being as good long-term investment, wafer services needs to eventually take over as the main driver of this business.
This is another unique aspect of Skywater's business model. This is the customer funded CapEx part of the model. This model has customers helping to fund those equipment needs for Skywater to produce the semiconductors. And you can see that listed under as tools in their revenue segmentation. And this is one of those tools that they're using, this multi beam lithography. Tell us a little bit more about that, Nick.
Well, we will do a video on what multi-column e-beam lithography is after earnings season. But Skywater was the first foundry, the first fab to take possession of this thing from a company called Multibeam. And the founder and CEO of Multibeam is Dr. David K. Lamb. Maybe that last name sounds familiar to you. It should indeed be familiar. Lamb Research was also founded by Dr. Lamb. So he's since moved on and has this new project called Multibeam. Again, we'll talk about what multi-column e-beam lithography is later this summer.
On a gap basis, Skywater operates actually at a bit of a small loss, but this is where that wafer services will definitely come into play. Wafer services would fix this loss over time.
And in the meantime, it's positive that because Skywater gets funding from its customers, it is essentially able to break even on a free cash flow basis, more or less. Again, this is nothing to hang your hat on if you are a shareholder in Skywater or interested in investing in Skywater. We need wafer services to make this a robustly profitable business over time, but it's going to take a while. The top of the funnel's been filled with potential customers. The revenue is trending in the right direction. ATS is up, tools revenue is up. And the good news is this is highly indicative of those wafer services hitting a major growth spurt, potentially next year and maybe into 2026.
More on that outlook for 2024 and into 2025. Sonderman said that they expect the wafer services to remain soft for at least another quarter or two because of the industrial weakness, especially, but they do expect to return to growth in 2025 for wafer services, driven by that thermal imaging and medical diagnostic segment. Skywater's balance sheet isn't squeaky clean, you might say. They have 37 million in debt and 18 million in cash and short-term investments. Nick, how does that affect our thesis for Skywater?
Having more cash than debt is definitely something we like to see. It's not something we need to see. This is still a young business, and it appears that they have enough liquidity on hand to manage this downturn. And again, because they're getting the CapEx help from their customers, they're getting the co-investment into building the actual manufacturing for those wafers, it appears that Skywater is going to be just fine, even if it does appear to be kind of slim on cash at the moment.
So in summary, these three small cap stocks are all stocks that we have added to our portfolio over the last year. We've taken a nibble on the dips for each of these companies, and we're happy with being patient with each of these small cap businesses and waiting it out while they're in our portfolio.
Yeah, and for us personally, the order that we put them in this video is, I guess I would say, how we rank them personally. Axcelis is the one that we kind of feel the best about. We like the big cash position on the balance sheet. The valuation seems very cheap because they're highly profitable. That said, all three of these are part of that small cap basket. So these are all long-term bets. If one of these blows up and doesn't do well, it's not going to blow up our portfolio. But if they do well and continue to outperform over time, we do continue to buy the dips, build up our positions, and allow the business to organically grow into a larger portion of our portfolio. Something 1%, 2%, or more is what we consider to be a core position. But we're never going to do that with a small cap business where we just bet a big chunk of money on a small cap business. Statistics are just not in your favor. You need a couple of dozen of these things in a basket to do well. Picking just 2 or 3 small caps and hoping that it makes you rich, suffice to say that's very difficult, and statistics are not in your favor. So there's the kind of typical small cap disclosure that we provide.
It's your small cap shtick, I would say. All right, everyone, make sure you have hit the subscribe button. Check out our Semiconductor Insider membership. It gives you access to video notes, live Q&As, exclusive content over on Discord, and we have much more coming your way. Make sure you stick around. We'll see you again soon at Chipstock Investor.